You ever have that dream? The one with total freedom? Working from a laptop on a beach somewhere. No boss, no schedule, just you and the financial markets, which basically become your personal ATM. Well, that is the powerful, seductive promise of day trading. Today, we're going to crack open Dr. Alexander Elder's classic, Come Into My Trading Room, to really get into the massive gap between that dream and the actual reality. And there it is. That's the siren song, right? Dr. Elder kicks off his book with these exact words because he gets it. He knows this is the deep down desire that pulls people into trading in the first place. It's this incredible, intoxicating vision of what your life could be. But, having a vision is one thing, making it real is a completely different ballgame. And boom, here is the immediate, sobering reality check. A study that Dr. Elder points to found that after just 6 months, only 16% of day traders were actually making any money. 16%? So it makes you wonder, what on earth is happening to the other 84%? Well, that's exactly what we're here to break down. Okay, so to really understand that 16% number, we first have to look at why day trading is so tempting to begin with. I mean, it does offer some very real advantages, but they come with a steep and often totally hidden price. This right here really gets to the heart of the trade-off. On the one hand, the action is nonstop. You get way more chances to make a trade, more shots on goal, so to speak. And you get to sleep at night without worrying that some news event overnight is going to totally wreck your position. But the cost is huge. You miss out on those big, life-changing market trends. Your profits on each trade are way smaller. And maybe worst of all, with all that trading, you're paying a constant stream of commissions and dealing with slippage, that little difference between the price you click and the price you actually get. Those tiny costs can and will slowly eat you alive. So if the game itself is that tough, you might be thinking, okay, the secret must be a better strategy or maybe some fancy software. But Dr. Elder is crystal clear on this. The most dangerous opponent you will ever face in the market isn't some high-powered hedge fund or a trading supercomputer. Nope, it's the person staring back at you in the mirror. This is such a brilliant way to put it. It perfectly captures the true nature of this game. Think about it. The market acts like this master psychologist. It uses your own baggage, your greed, your fear, your impatience against you. It'll tempt you when you're feeling greedy to take a position that's way too big. It'll scare you out of a trade right before it makes a huge move. Your personal weaknesses become your biggest financial liabilities. And believe me, the market is an absolute expert at exploiting them. And this is exactly why Dr. Elder argues that, look, some people shouldn't even try, because without these core traits, success is pretty much impossible. You need the discipline of a soldier on guard duty. You need a genuine tolerance for risk. I mean, you have to be okay with watching your account balance go down, and you have to be comfortable doing quick, clear-headed math when you're under a ton of pressure. If you're weak in any one of these areas, the market will find it and it will use it against you, relentlessly. Okay, so let's say you've done the self-assessment and you feel like you have the right mindset. What's next? Well, Dr. Elder makes his absolutely crucial point. Amateurs are always looking for a challenge. Professionals? They're looking for an easy trade. They want the path of least resistance. And that whole process starts with picking the right market to even plan.
So, the first thing you need is liquidity. Think of it like a really busy highway. When there's high liquidity, there are thousands of other cars on the road. You can easily merge into a lane or take an exit without causing a huge traffic jam. But in a market that isn't liquid, well, your order is like a giant semi-truck trying to merge, and everybody sees you coming, which almost always works against you.
But just having a busy highway isn't enough. You also need volatility. The market actually needs to move. A stock that just sits there all day, even if a ton of shares are traded, offers zero profit potential. Volatility is basically the size of the playing field. The wider the daily price range, the more room you have to actually make a profit. And that's the secret combo right there. The pros hunt for markets where it's super easy to get in and out, and where there's enough price movement to make the whole effort worthwhile. They're basically looking for a nice, flowing river, not a stagnant pond, and definitely not a raging, unpredictable flood. All right, so how do professionals actually navigate these markets once they find them? Well, they don't guess. They use a structured, disciplined method. And Dr. Elder's triple screen system is a fantastic example of this pro-level approach. It's specifically designed to filter out the bad trades and keep you on the right side of the market's momentum. The absolute genius of the triple screen system is that it forces you to just step back for a second. See, an amateur gets hypnotized by the tiny 1-minute chart, and they see what they think is a buy signal. But a professional knows that that little signal might just be a tiny blip in the middle of a massive downtrend. By looking at multiple timeframes, you get perspective. You avoid fighting the dominant current of the market.
The logic here is just beautiful in its simplicity. It's a three-step filter. First, step one is your strategy. You use a longer-term chart, say a 25-minute chart, to identify the market's tide. Is the big picture trend up or down? That tells you whether you should only be looking for buys or only looking for sells. Step two is your tactic. You zoom into a shorter chart, like a 5-minute chart, to find a wave, a little pullback against that main tide. That's your entry point. And finally, step three is execution, where you pull the trigger with a predefined exit plan already in place. So this is screen one. On this 25-minute chart, you're not actually looking for a trade yet. All you're doing is making one single strategic decision. Am I a bull today or am I a bear? If this trend is pointing up, you are forbidden, absolutely forbidden, from taking any short trades. That one rule alone will save you from a world of pain and bad decisions. Now, once you know the tide is rising, you move over to screen two, and on this 5-minute chart, you do not chase the price higher. Instead, you wait patiently for a pullback, a small wave moving against the bigger trend. This gives you a much better, lower-risk entry price. You're essentially buying on a small dip within a larger uptrend. It's a classic professional move.
So we've got the psychology, we've got a professional system. But Dr. Elder leaves us with one final and really crucial warning about the brutal economics of day trading. It's a real gut check for anyone who still thinks this is some easy path to getting rich. And this, right here, is the bottom line. The profit margins in day trading are razor thin. It's not like long-term investing where you can afford a few mistakes here and there. Day trading demands near-perfect execution every single day. You have to be an A-level performer because even a B-level performance gets completely devoured by the cost of just playing the game. There is almost zero room for error. So we end with this question. A brilliant system like the triple screen, it gives you a solid plan of attack. But that plan is totally useless without the ironclad discipline to actually follow it, which forces us all to ask a tough question. Are you more likely to fail because you can't find a good strategy? Or are you more likely to fail because you just can't control your own impulses in the heat of the moment? The honest answer to that question, well, it reveals everything about your chances of survival in the wild world of day trading.